Mohamed El-Erian, Allianz's Chief Economic Adviser, is on the phone with us now to recap today's trading day. So, Mohamed, this morning when the Dow was down 600 points, you tweeted that it was a brutal open for stocks and that unlike prior sell-offs, today's trading so far, that was this morning, had the feel of a shakeout. We've now all seen the close, the biggest one-day decline for the Dow in terms of points ever. Now, how do you feel? What did you think about the close?
So I thought the close was ugly. I also tweeted when we had recovered 3% from that bottom that the bottom formation process was under threat because of the California news. And what we saw it being taken out. I think it's important to understand that there are two very distinct dynamics going on. One is technical, that we needed a washout of some sort where you see forced deleveraging, where you see retail panic selling, and we got that evidence at the open today. And typically that helps provide a bottom, a technical bottom. However, when the fundamentals take a leg down before that bottom is established, which is what happened at around 12:30 today, you then go right through the bottom again, and it makes it problematic for what happens next. So this is going to be a very volatile and unfortunately not a very friendly market in the immediate period ahead.
Now, Mohamed, you noted earlier you don't believe at this point that the Fed should be out there, whether it's cutting rates or doing unplanned speeches. But certainly the calls that the Fed and other central banks around the world need to act are going to get louder. How long do you think central banks can fend off those calls that they need to step in here with a market looking this sloppy?
Not very long. What they're going to see today is A, massive market pressure on them to cut, B, massive political pressure on them to cut, and C, they're going to start seeing technical dislocations in the marketplace, which is the thing that central banks fear the most. So my expectation is that we will get a cut in March, if not before. We may even get a coordinated global response, meaning that the Fed would act with other central banks. That will help a little bit the financial sector. It will help a little bit financial balance sheet. But it's important to understand this is not a financial economic stop. This is a series of economic sudden stops. So in a financial sudden stop, as you know, what happens is two parties, typically banks, will not deal with each other. Mm-hmm. They don't trust each other. Counterparty risk breaks down. So along comes a central bank and says, trust me. I have a printing press in the basement. Trust me. And you resume the functioning of the system. An economic sudden stop is very different. Mm-hmm. If you don't want to go back to your job in China, in a factory in China, if you're afraid of traveling, it doesn't matter what the central bank will do. You don't care about the central bank being there as your counterparty. You care about being safe in economic interactions. So the central bank will not have much impact on economic activity, unfortunately.
And I guess, Mohamed, you know, you wrote a book, I think it was 5 years ago now, about how central banks were the last defense, right? We didn't have the fiscal coordination we needed. Is this maybe the moment that the global financial markets look around and realize that central banks do not have the ammunition to deal with the crisis we're facing?
So I think we're there already in the case of the ECB. I've been arguing that by going negative on interest rates for so long, the ECB has not just become ineffective, but has become counterproductive. And you see that in terms of the internal divisions going on within the ECB that the new president, Christine Lagarde, is trying to heal. The Fed is not there yet, but I worry that if they cut aggressively, and this has no impact on the economy, people are going to realize that our central banks are becoming more and more ineffective. Now, to be clear, this is not the fault of the central banks. This is the failure of a handoff for years now, and that's what I warned about in my January 2016 book. It's a failure for years now of going from excessive reliance on central banks to a much more comprehensive pro-growth policy, which requires the politicians to open the way up for structural reforms, and in the case of some economies, Germany, Netherlands, fiscal action.
Mohamed, could you break down what you think the market is pricing in right now? Is it starting to price in a recession, a mild recession later this year?
It's pricing in a significant economic slowdown, and it's pricing in corporates, especially the multinationals, being hit by both lower revenues and higher cost. And finally, it's pricing in some deleveraging. It is not yet pricing in the worsening prospects for the economy and the corporate sector that I believe, unfortunately, will result from this coronavirus scare.
Mohamed, Guggenheim's Scott Minerd was out earlier today, and there's a Bloomberg story saying that he said that coronavirus may be the worst event in his career. Is that along the lines of anything you're thinking?
So I think it's too early to say that. You know, I've been negative for a while. I warned against buying the dip. I warned that this time it's different, that people don't understand how bad the dynamics of an economic sudden stop can be. You don't see it in big countries. You see it in small developing countries, mostly fragile or failed countries. So you don't see something this big happen in big countries. So I've argued, careful, this is different. And what it does is it brings a complete halt the movement of people, goods, and also services, ironically. So this is a big shock. It is both a supply and a demand shock. It is both internal and external, and it hits manufacturing and services. Unless you're a producer of masks, there's almost no place to hide. So this is significant. Don't get me wrong. This is significant. Whether I would call it the worst shock in my life, I don't know.
Mohamed El-Erian, thanks so much for your thoughts. Always great to speak with you. You're looking at the final numbers there.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.